Saw some of these OGs with large positions come to us looking to do option overlay strategies to take down their exposure a bit out of fear that the 4-year cycle would repeat. And sure enough, it did, right? We saw the retail selling, including from long-term holders, drive us into this bear market in Bitcoin. A lot of the OG investors made a huge amount of money. They got Bitcoin this far. Congratulations. They want to diversify their portfolio. That's creating some sell pressure, as Jordy Visser and others showed. It's being replaced by this institutional community. That's a much larger pool of capital. The fundamental case for Bitcoin in terms of worries about fiat currency are stronger than ever. In terms of the world being more digital is stronger than ever. That's going to take that up and to the right.
As institutional money pours into crypto, one uncomfortable reality has become impossible to ignore. Retail investors still hold the power to shape market cycles. Matt Hougan is one of the world's leading experts on crypto, ETFs, and financial technology. He is global head of research for Bitwise Asset Management, creator of the world's first cryptocurrency index fund. Matt Hougan reveals that one of the most important lessons from the current crypto market cycle is that market psychology can outweigh even the most sophisticated analysis. While many industry participants correctly anticipated the continued rise of institutional adoption, the expansion of stablecoins, and the growing influence of tokenization on the global economy, they underestimated the enduring impact of retail investors on crypto market dynamics. According to Hougan, institutional investors, including financial advisors, family offices, and sovereign wealth funds, have largely moved beyond the traditional 4-year crypto cycle and are building long-term strategic positions in digital assets. However, he acknowledges that focusing primarily on institutional sentiment created an analytical blind spot. Approximately 2/3 of crypto assets remain in the hands of retail investors, whose belief in historical market cycles effectively turned the 4-year cycle into a self-fulfilling phenomenon, contributing to the recent market downturn. Despite this, Hougan remains optimistic about the long-term outlook for digital assets. He argues that blockchain-based financial infrastructure represents a significant investment opportunity because it is attempting to modernize a global financial system valued at roughly $650 trillion while operating within a market worth only a few $100 billion. He also notes that the scale differential between stablecoins and traditional banking flows suggests that institutional adoption will likely follow a different path than retail experimentation, with capital preservation, regulatory compliance, and operational efficiency becoming the primary drivers of large-scale financial adoption. The future of crypto may be uncertain, but the opportunities and lessons have never been clearer. If you enjoyed this analysis, be sure to like, subscribe, and share for more market insights.
The people we speak with, the institutional investors, they see this as a decade or 2-decade long trade, and there's nothing that's broken fundamentally about Bitcoin. It's still the only way to store money in a digital format without a government or a bank. Governments are still printing more debt. They're still building deficits. There's no sign that that's reversing. Yes, Kevin Warsh is maybe a little bit more hawkish than people expected, but it's not stopping the train, to use Lynn Alden's term, right? This is still up and to the right. So they aren't fundamentally questioning it. A few people raise concerns about quantum, and I actually agree that the Bitcoin development community needs to lay out a clear roadmap on how it's going to deal with quantum, but that's not any different from past pullbacks, right? There were concerns about Tether. There were concerns about FTX. There were concerns about custody. The feeling of sort of despair and apathy, and this time it's over, that comes with every market cycle. So from my perspective, nothing fundamentally has broken on crypto. And from the people I speak with, nothing fundamentally has broken on crypto. And you can see this in the institutional announcements that we're seeing from large firms. BlackRock launching a new fund, Morgan Stanley, launching a Bitcoin ETF, Charles Schwab talking about direct access to this space. These are oil tankers. They've shifted to be behind Bitcoin, and they aren't being deterred. I think the worry that something has broken fundamentally on Bitcoin is really a crypto Twitter concern and not an institutional crypto concern. So I wouldn't worry too much about that one. Some progress, additional progress on quantum would help, but I don't think it's fundamentally broken in the eyes of the institutional community in any way. I think it's still really robust. And then I can tackle the second one in terms of this. Yes. It needs a new message. Look, I think the fundamental driver of the next leg up is going to be institutional investment. I think the IPO analogy is correct. But the thing about IPOs is that after you go through the digestion phase, you see the real value of the underlying company show up, right? So Facebook IPO'd at $38 and traded down to 21 and is now trading in the hundreds, right? Like, so most of the value accrual came after you had that initial wave selling out, being replaced by long-term institutional investors. And then the fundamental value of the asset took over and lifted it up and to the right. We're probably going to see the same thing on SpaceX right now, right? A lot of insiders wanting to come out, but long-term, that's a phenomenal business. Long-term revenue, profits, and earnings will drive it higher. In Bitcoin, a lot of the OG investors made a huge amount of money. They got Bitcoin this far. Congratulations. They want to diversify their portfolio. That's creating some sell pressure, as Jordi Visser and others showed. It's being replaced by this institutional community. That's a much larger pool of capital. The fundamental case for Bitcoin in terms of worries about fiat currency are stronger than ever. In terms of the world being more digital, is stronger than ever. That's going to take that up and to the right. I do think, actually, that we're starting to see an inkling of sort of the newish use case in the international use of Bitcoin to settle transactions. We saw the thing about Iran tolling for oil in Bitcoin. We may not like that particular use case, but it is a signal that global communities at the country level consider Bitcoin now fit for purpose to potentially settle international transactions. And in a fractured world, I think we're going to see that sort of poking its head up a little bit as a new use case that people start to factor in. But the big use case is most of the world's money has no exposure to Bitcoin. That's going to change, and I think that will lift the prices higher.
Bitcoin's drop below $60,000 has reignited fears about the future of crypto, but according to institutional investors, the long-term story may be far from over. Matt Hougan reveals that recent market weakness has done little to change the long-term investment thesis for Bitcoin among institutional investors. Despite Bitcoin falling below the $60,000 mark and the failure of predictions that the asset would permanently break its historical 4-year cycle, Hougan argues that institutional confidence in Bitcoin remains remarkably strong. According to him, major investors view Bitcoin as a decade or multi-decade opportunity rather than a short-term speculative trade, and they continue to regard it as the only digital asset capable of storing value independently of governments and traditional banking systems. Hougan acknowledges that concerns surrounding quantum computing, market cycles, and investor sentiment have resurfaced, but he notes that similar fears have accompanied every major crypto downturn, from stablecoin risks to exchange failures and custody concerns. He believes that the current wave of pessimism reflects another cyclical phase rather than a structural breakdown of the asset class. Meanwhile, the continued expansion of institutional participation through major financial firms reinforces the view that long-term adoption remains intact. According to Hougan, the next phase of Bitcoin's growth will likely be driven by institutional capital replacing early investors who are gradually diversifying their holdings. He argues that rising government debt, concerns over fiat currency debasement, increasing digitalization, and emerging international settlement use cases continue to strengthen Bitcoin's fundamental investment case. Ultimately, he believes that the limited exposure of global capital markets to Bitcoin today represents the asset's greatest long-term growth opportunity. Let's get back to interview.
Oh man, it's completely crazy. All the work we do analyzing this market, and we could have just set up a calendar and flipped over a page and known exactly what was going to happen.
Right.
Look, we got some things right. What we got right was that the institutional adoption of crypto is very real. I know you're seeing inflows and outflows from ETFs, but generally we're on a trend towards more institutional adoption. We got right that the growth of stablecoins and tokenization were a real thing. I mean, crypto is more impacting the real world economy today than at any point in its past. The thing that I missed, the mistake that I made, I was a victim of my own echo chamber, which is I spend all my time talking to financial advisors, family offices, institutions, sovereign wealth funds, and they were out of the 4-year cycle. They were building a position in crypto, and they're going to be doing that for the next 10 years. And that is just true. And it continues to be true. Every day, I still have conversations with this group. They are still allocating to the space. The thing I missed is that the vast majority of crypto is still owned by retail investors. About 2/3 of all crypto assets are owned by retail investors. And for them, the 4-year cycle is almost a self-fulfilling prophecy.
Yeah.
We actually saw it at Bitwise. We saw some of these OGs with large positions come to us looking to do option overlay strategies to take down their exposure a bit out of fear that the 4-year cycle would repeat. And sure enough, it did, right? We saw the retail selling, including from long-term holders, drive us into this bear market. We're now seeing that bottom out. But that was the big mistake I made. I ignored the fact that the majority of crypto was owned by OG investors and retail. And I was speaking mostly to the institutional crowd, and they were bullish. And I let that color my thinking. Is that if you look at the part of crypto that's trying to reinvent traditional finance, which is everything excluding Bitcoin and maybe Litecoin, Zcash, a few of those other assets. If you look at the rest of the layer one and application layer, it's a very small market. It's like a couple $100 billion. So we're trying to reinvent all of finance and put $650 trillion of assets and a complete financial system into a market that is, let's call it $200 to $300 billion. From an investor's perspective, just buy that. Just buy it. Because if it's successful, it's not $200 billion, it's $2 trillion, right? And so is it Ethereum? Is it Solana? Is it Sui? Is it Avalanche? Is it Hyperliquid? Is it I don't know. Like, I have my favorite assets. I think Solana is exceptionally well positioned right now and executing really well. I'm extraordinarily bullish, particularly compared to its market size. I think Hyperliquid is a fascinating asset with really spectacular tokenomics, and I think it could be substantially more valuable. But from a broad-based perspective,
the recent crypto market cycle has highlighted a critical reality. While short-term price movements remain heavily influenced by market psychology and investor behavior, the long-term structural trends supporting digital assets continue to strengthen. Institutional adoption is advancing steadily, supported by growing interest in tokenization, stablecoins, and blockchain-based financial infrastructure. At the same time, Bitcoin's core value proposition as a scarce, decentralized, and non-sovereign store of value remains intact despite recurring market cycles and periodic waves of pessimism. As early investors gradually reduce their exposure, a much larger pool of institutional capital appears poised to play an increasingly important role in shaping the next phase of market growth. Combined with rising concerns about sovereign debt, fiat currency stability, and the continued digitalization of the global economy, these developments suggest that digital assets may still be in the early stages of a much broader and longer-term transformation of the global financial system. What do institutional investors know about Bitcoin that retail investors don't? Be sure to like this video, subscribe to the channel, and turn on notifications so you never miss an update. Thanks for watching, and I'll see you in the next video.